we got some massive news for Nvidia stock investors as the US government placed more restrictions on the company's ability to export chips to China and other countries listed, as I will discuss in this video. I'll highlight what this could mean for Nvidia and Nvidia stock investors. I'll talk about the $5.5 billion Nvidia said this will cost them in the upcoming quarter, and why in future quarters I don't believe it will have as large an impact as it's going to have in this first initial quarter, where the company will record the cost of this initiative.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so here is the statement from Nvidia discussing the implications. So Nvidia told investors that on April 9th, 2025, the US government informed Nvidia that the US government will require a license for export to China, including Hong Kong and Macau and other D5 countries, or to companies headquartered with an ultimate parent therein of the company's H20 integrated circuits and any other circuits achieving the H20's memory bandwidth, interconnect bandwidth, or combination thereof. In other words, what this means is Nvidia will have to ask for a license to export these chips H20 or above to China and other D5 countries, China being the most important country of that list of D5 countries. Now, Nvidia has already had a restriction on more cutting-edge technology exported to these countries. The H20 was the lowest level technology it was allowed to sell to these countries without restriction. So now even the H20 will be restricted. Now, the way they're wording it is saying that they're going to require a license to export these technologies to China, but it doesn't look like they're going to get the license even if they apply for the license. It looks like what the US government is trying to do is restrict Nvidia's ability to sell into these countries this level of technology. So Nvidia will likely have to downgrade and send them lower level technology and hope that the US government will allow even lower level technology to be sold to these countries, but they're going to have to work with regulators to determine if that's going to be all right. The company's first quarter of fiscal year 2026 is going to end on April 27th, and these first quarter results are expected to include approximately $5.5 billion of charges associated with these H20 products for inventory, for purchase commitments, and related reserves. So Nvidia already had sales contracts. It was already planning to send a certain amount, several $billion worth of this technology into these countries, primarily China, but now it will not be able to, and it's already produced these. It was already earmarked for those customers. The good news is that there is such high demand for Nvidia's products, they are not likely to go obsolete. They will likely find buyers for this inventory that they're not going to be able to sell into China. Nvidia has said that their cutting edge technology is sold out, and so customers are getting and buying whatever they can get their hands on, even if they can't get their hands on the latest generation technology. So you might say, well, if Nvidia is likely to find a buyer for this inventory, why are they telling investors that they're going to take a $5.5 billion charge? Well, I think this is a good move on Nvidia's part. Nvidia is being hit with an export restriction, and it's a good time for Nvidia to tell the US government, hey, look, if you're going to restrict our sales to this country, it's going to cost us $5.5 billion, which we're going to reduce or deduct from our first quarter 2026 profits. And so we will have less profit to pay taxes on, $5.5 billion worth of profits that they will have fewer taxes to pay on. So they will owe the governments the there's several governments that they're paying taxes to, and that will reduce the amount of taxes they owe because it will reduce their profits by $5.5 billion. Even if later on down the line they find partners to sell that inventory to, they can still reap the benefits of that tax deduction early on, and then they can pay the tax later on and benefit from the time value of money in these situations. So I mentioned that this first quarter hit is likely to be much larger than in future quarters because Nvidia is trying to capture the tax benefits of that reduction of that write-off immediately. But I have a chart here, which I got from finchat.io, and you can see Nvidia's most recently completed fiscal year, which they reported on in January of 2025. The company generated $131 billion in revenue, and only $17.1 billion of that was from China, which includes Hong Kong. So that was all of the revenue the company generated from China, 17 billion out of the 131 billion. And for 2026, it's likely to be much lower than that because the restrictions were increasingly placed on Nvidia, and the sales into the region is likely to be a smaller percentage of Nvidia's overall sales. So following the news, of course, Nvidia's stock price took a hit, and Nvidia's forward price to earnings valuation is now at a forward PE of 22.84. So when the news came out, and in the following days, I've had a lot of investors ask me, what do I think about Nvidia stock now? What do I think about these developments? And do I still like Nvidia stock? Because I've had Nvidia stock rated as one of the best 9 stocks to buy in 2025. Does this news change my opinion? So overall, I still like Nvidia stock. I still think it's one of the best 9 stocks to buy right now. And I updated that recommendation on April 17th, 2025. But I do believe this news is bad news for Nvidia. It will cost the company significant sales revenue, significant profits from exports to those countries. Maybe the company will adjust and be able to sell those products to that country with lower levels of technology. That remains to be seen. But I'm encouraged by the fact that there's such strong demand for Nvidia's products that there's likely to be buyers for that technology, even if it's not going to be to China or to those regions, or even if it's not going to be at as high a margins as it was hoping for. It's likely to find buyers, and it's not likely to go obsolete. So while this is negative news, overall, the company remains one of my favorite companies, and the business demand for its products is only going to continue as the rising effectiveness of artificial intelligence makes customers seek this technology for all the benefits it provides their own businesses. Hey everyone, we've got some exciting news to announce. We launched a private Discord exclusively for our channel members at the VIP Discord tier. It's your backstage pass to ask questions, share insights, and get direct access to me. Don't miss your chance. Limited spots available, so join now.